much later than normal. It is presently almost 7 p.m., Wednesday, December 17th. And as promised, I wanted to make sure that I hopped on live with all of you guys to recap not just the day. We're going to talk a little bit about our day and the Zoom call that we just got off on with our most recent first time home buyer that was actually referred to us by another recent first time home buyer that officially closed on her home last week. Super exciting. And thank you so much for the referral. But I also wanted to talk to you guys a little bit about before the end of the year here, some end of year predictions. There is a new $20,000 first time homebuyer workers advantage type program, down payment assistance, that's taking the Clark County social media algorithm by storm. I keep seeing all the realtors and lenders here in town talking about it, and that's fantastic, right? More opportunities for more people to become homeowners. But I wanted to dig into some of the details. Obviously, remember, the devil's always in the details. So just talking a little bit about some of the nuance to that program and what a first time homebuyer or someone purchasing a home might not realize. So let's just hop right into it. So, firstly, one of the reasons I'm so late today and not doing this at noon is I had a very busy day doing some husbandly duties for my wife. We had a couple appointments that we had to get to. I, of course, wanted to make sure I was with her. So I apologize. I'm sorry I wasn't here earlier this afternoon for our live. And then, spending the afternoon on text and email while we were doing, some things together, making sure to set up appointments for the evening, making sure all things are still moving and flowing smoothly. As soon as we got home, right around 5:30, hopped on a Zoom call with a new first-time homebuyer referral. And again, guys, just another testament of who you partner with matters. And being able to set up this first-time homebuyer literally from a very ground level, foundational level of understanding, not just what a mortgage pre-approval is and what you need to do that. And in her case, we had already set her up for success prior to that. She had already uploaded all of the items that we needed to review together on that first Zoom call. And she herself had set herself up for a ton of success already prior to speaking to me. I'm talking about financially, all income, all employment, her savings, just been doing a phenomenal job. And she has earned the right to become a homeowner. So I'm super happy to be working with her. Obviously, that referral from a past client of ours that we helped become a first time homeowner over the last couple of weeks is greatly appreciated and a testament to, of course, making sure that the partners that you're working with always have your best interest, always do your due diligence, obviously, and make sure that the people that you're working with have your back. So we greatly appreciate that. Anyway, so we hop on the Zoom call, and after collecting all of the items and setting up the time to chat on Zoom, and again, I always really, really try to make sure that when I'm setting up the first interaction with my client, I want to do one of two things. At the very, very least, I want to get you on a Zoom call together. That way we can meet each other face to face. Okay. That's if we're not able to. So, although I might look really young, I've been in the business, again, second generation in the mortgage business here in the Las Vegas and Henderson community. My family's been serving Las Vegas and Henderson community for over 30 years. I spent my life growing up in mortgage companies and sitting in some of these meetings that with my mom and in her era and her day and age have always happened face to face. So if I'm not able to get you into my office, which again, we're local here in Henderson on the Horizon Ridge and Coronado Center, then I definitely want to get you on a Zoom call. But one of the two. It's one or the other, okay? Unless it's a very, very specific, very special circumstance that you're just not able to hop on a Zoom call or an in-person meeting with me. Sure, we'll hop on a phone call, but I will still make sure that we're getting face to face as soon as possible. Now, why is that? I feel like that is a very important part of the business that we're in. Okay. When you're talking to somebody that is ideally going to make the dream of homeownership a reality for you, or if we're refinancing and moving around financials and debts and assets and things like that. But the people that do what I do for a living do a very, very special, a very, very difficult job. Right. And I want you to be able to look that person in the eye and know that that person is, again, going to be there with you every step of the way. I am going to be there every step of the way. I am invested in your success just as much as you are. So I feel like that can really only happen face to face. So Zoom it is or in person meeting. I promise you it works. Do it. Like, just do it. You know what I mean? Like, ditch the phone calls if possible. They're like, we'll do phone calls for sure, but Zoom or in office. So, anyways, tropical smoothie, by the way, delicious. Okay, so we get my first time home buyer on Zoom. Admittedly, she's a little nervous, of course. She was referred by a very, very recent past client that had talked us up, all the good things, which is fantastic, and already uploaded all of the items that we need to review together. So, what do? We start with a very, very foundational level of understanding of, essentially what does homeownership mean to this person? What are all of the moving parts to becoming a homeowner? What does, when qualifying for a mortgage and to actually get pre approved, income, employment, assets, credit, and debt mean to that person, specifically to their scenario? What are some of the benefits and advantages to this present market and purchasing right now in the environment that we're in? And then moving forward, what are some of the certainties and guarantees that we can make for that person to help them achieve their goal of homeownership as smooth, as simple, and without, with as least amount of headache as possible? So by the end of that call, we were able to get all of those things done. We were able to understand that our first time homebuyer is not only well equipped and well, prepared to move forward, but we were also able to drill down into some, not just specific program types and understanding some of the finance behind it, but exactly what numbers might look like based on these purchase scenarios that we want to make happen. So, another thing, again, with the partner that you're working with on the mortgage and lending side, you really want to drill down into nuance and detail. Okay. You don't want to go, paint too broadly. You want to have some very specifics, even if it's in the very beginning. We don't even have a house yet, obviously. They haven't shopped yet, but we can still make some very specific examples based on, some ideas of, what do we know about areas that we're looking for, properties that we're looking for, taxes, homeowners insurance, HOA, all of the above. We want to make sure that they're set up for success. But lastly, and this is going to tie into the next thing that we talk a little bit about, is the first time home buyer programs that are available to this person. Okay. During our conversation, I was actually explaining to this person that based on the borrower, their qualifications, and how they come over to me. Okay. One of the reasons why it is so important to try to make yourself as prepared as possible for homeownership is because when you are prepared, and what does being prepared for homeownership mean? It means that you are financially prepared, you're credit prepared, you are timeline prepared. Okay. So, income and employment. Do we have a satisfactory 2-year work history? What does your lease agreement look like presently on the place that you're renting? What does your credit look like? What does your savings look like? All of the above. And I explained to that person based on how qualified that they actually are, right? How prepared they are in the beginning. And again, we can obviously help you get more prepared through the process. But the more prepared you are, the more opportunities you present to yourself. Okay. Now, obviously, you have to be working with the right lending partner that actually has options and isn't a bank depository direct lender that only has one option. Okay. But when you're working with a mortgage broker, the more prepared a client of mine is, the more optionality we can give them. So, this particular client, like I was saying, is extremely prepared, has done all of the work and preparation and savings and credit and sacrifices and all of the above. They just did all of the work. Couldn't be more proud of this client, and we are greatly looking forward to helping them achieve their goal of homeownership. So, this particular person, we talked about many different first time homebuyer programs. First, we talked about true first time homebuyer conventional loans, right? Because remember, a true first time homebuyer loan is actually really only available on a conventional loan, okay? Fannie Mae, Freddie Mac, you have not owned real property in the last 36 months. So, in the last 3 years, you have not become a homeowner. Okay. That is a definition of a first time home buyer. So conventional home loans, right? 3% down as a first time home buyer is the minimum down payment requirement as a first time home buyer on a conventional loan. FHA loans. Okay. Too many people get confused that FHA loans are for first time homebuyers. That is not true. FHA loans are, in fact, for the purchase of your primary residence. Okay. You could have owned 1 million homes prior to that. You could own 3 homes, in another state right now. But the purchase of a home using an FHA loan was for the purchase of a primary residence. You have to occupy that property within 60 days of closing. Okay. Now, a lot of first time home buyers use FHA loans for the purchase of their primary residence because it allows qualifying with a significantly more flexible qualifying FICO score and debt to income ratios. So many of the times, first time homebuyers will qualify easier on an FHA loan than they will a conventional. Okay. But in this case, my borrower, again, well qualified, will have the option of both. And then we drilled down a little bit into down payment assistance and grants. Okay. So I'll weave this a little bit into the $20,000 Worker Advantage program here in just a little bit. But this particular borrower, hi, Rosie, welcome to the party. This particular borrower, we also brought up the idea, right, of why or why shouldn't she try to pursue down payment assistance or grants? Okay. And what does that, what pros and cons does it have for her? So, in her exact case, when you're a high qualifying FICO borrower, you actually have down payment and savings and all of that stuff, assets set aside already, you would be setting yourself up for a much greater, not just chance of success, because we can kind of make that chance of success just as high on both sides, but setting yourself up for more financial success quicker, putting your own minimum down payment obligation down versus using a down payment assistance or grant. What too many people don't talk about enough is some of the downsides to assistance or grants, right? Now, again, remember, I am the biggest advocate you could imagine for home ownership. Obviously, I own a local mortgage brokerage here in my community, and I want every opportunity of home ownership available to the members in our community. We have clients, we have families, we have people in our community that otherwise wouldn't be able to realize the dream of homeownership if it wasn't without a down payment assistance or grant program. That's why those programs exist. But using a down payment assistance or grant program, you need to know and understand some of the downsides as well. Now, if you have no other alternative, no other option, then sure, obviously down payment assistance and grant is the fit for you. Let's rock and roll. Let's make it happen. But in the event that you can afford to, or you have an ability to, you have a savings set aside, a 401k, retirement, gift funds from family, what have you, you truly are setting yourself up for a much quicker financial success story when putting your own down payment down. Okay. Now, again, why is that? That's because on down payment assistance and grants, guys, just full disclosure, right? Nothing is ever free in life. Okay. So some of these different down payment assistance or grant programs. Now, the essential worker $20,000 down payment assistance grant we'll talk about specifically in a bit, but in general, right, with me as the owner of my mortgage brokerage, we work with many different mortgage lenders, all wholesale lenders all across the country, to make sure that we have the best optionality as far as programs, rates, closing costs, all of the above. Many of those lenders have different down payment assistance and grant programs available. Okay. So remember, assistance means there's some sort of a repayment term to it, repayment amount to it, or some sort of contingency attached to the amount of money that they're allowing you to borrow for down payment. Okay. That's down payment assistance. A down payment grant, okay, should not have any sort of second lien attached or any sort of specific repayment. It might have a significantly higher interest rate, right? Because you're being given a grant that's immediately forgiven at closing. Although, even with the higher rate, you could make a argument for the grant still being, you know, hugely financially beneficial because there is no, in fact, second lien or repayment. Now, in the way of the down payment assistance program, right, you start getting into a bunch of nuance specifically with, okay, what does that down payment assistance mean for me? Now, again, like I was saying, a lot of people that don't have any alternatives or any other way to make homeownership a possibility, by all means, go get it. Let's make it happen. Again, like I said, I have so many different down payment assistance or grant programs that will fit all sorts of scenarios. Okay. What you would want to try and look for is a down payment assistance program, okay, that has some sort of forgivable term, okay, ideally, right? If it has a forgivable term, meaning it's forgiven in 3 years, 5 years, whatever, that would mean that if you held that specific mortgage for that specific amount of time and you had pristine payment history, didn't miss any payments, whatever, that down payment assistance amount of money that you borrowed would be forgiven. Okay. So there's no repayment of that money if you satisfy the forgiven terms. Okay. Now, in the way of a regular down payment assistance where there is no forgiven term, there's no 3 year, 5 year, whatever forgiven period, or it's not a grant where it's immediately forgiven at closing, which would be super sweet. A regular down payment assistance program is essentially a second lien on the property that you make a payment specifically to, in addition to the regular monthly mortgage payment. Okay. A lot of times that second lien will be at an interest rate 2% above the actual regular note rate. So if you have a 5% FHA mortgage, your down payment assistance second lien would be 7% for if you borrowed, let's say $10,000, whatever the case would be a small monthly payment, but you're paying it until the second lien is paid off. Okay. So you're actually repaying. So a repayable second is what they call it. So there's lots of different forms of down payment assistance, grants, forgivables, non-forgivables, repayment, what have you. And again, like I said, the devil's in the details. So you really, really, really need to drill down and understand exactly the whys, the what's, the hows, and what exactly does your future look like in that house as the owner. And in the higher rate environment that we're in right now, right? Obviously, rates are starting to come down finally. There's a ton of strategy that we can deploy, especially if you're putting your own down payment down to get you an even lower rate. But many of our clients, if not all of them that are purchasing, not just now, but within the last few years, they have with us, okay, we have a built in refinance plan and formula for them. Okay. Ideally, you don't want to be stuck in a loan that you're going to have to repay the amount of money you borrowed within, if we're planning on refinancing in 12 months, 2 years, whatever. You want to be given the opportunity to refinance when rates improve if possible. So, what does that mean to you? Okay. So, super important to really kind of just, depending on the mortgage lenders and partners you're working with, just ask questions. Like I said, dig into the details. And if you're not able to get those questions and answers, please make sure to reach out to me. You can, of course, reach me day and night. You can call me, text me, email me. I'm always available on all socials and at siennamortgage.com. Of course, you can submit a loan application. We can dig into any of the options needed for your exact qualifying scenario. Now, remember too, a lot of these down payment assistance and grant programs, they don't require you to be a first-time home buyer. Some of them do, but many of them don't. Many of them just have one qualifying criteria, whether that means you're at or under 140% of the area median income, you're a first responder, you're a first time home buyer, you're an essential work, whatever the case may be. Many of these down payment assistance programs will allow other types of qualifiers. Okay. Now, that gets me into the Worker Advantage, the Nevada Housing Division, which is like I said, another fantastic opportunity for some people. But let's just take a look at it briefly. Okay, real quick. Let me share my screen. Okay, bang, bang. Here we go. There we are. So we've got the Worker Advantage program. Okay, this is again a state, I believe, state-sponsored program through has to be a direct lender. Okay, not a mortgage broker, but a direct lender, someone that finances and funds off of their own warehouse line. Okay, so you in this particular program are going to get a $20,000 down payment assistance. Okay, in the form of a no interest, no payment, non-forgivable 30-year second mortgage. Okay. So again, really that's like the main point of this that I wanted to talk about, right? Where again, you're getting up to $20,000. That's not to say that you are going to get $20,000, but up to $20,000 specifically in this program. Okay. The amount of money that they're lending to you or letting you borrow or giving as assistance, okay, does not have any repayment terms during the loan itself. Okay. But in the event that you sell the home, or you want to refinance. Okay, so the rates for these specific programs are not posted on the actual homeispossiblenv.org website. I believe you'd have to go specifically to the actual lenders themselves and find out what rates and costs, et cetera, look like with them. But let's just say, for example, it's just regular market rate right now, which would be fantastic for down payment assistance or grant. Okay. But let's just, for conversation reasons, say that's what it is. I can't imagine that's what it's going to be. They're generally, anytime you're getting assistance or grants, like I said, they're going to have a little bit of a higher interest rate. But let's say you're going to get a $20,000 assistance, okay, at a market rate or just slightly above market rate. And what does the future look like for you? Okay, so if that happens to be a 5 or 6% interest rate, that means essentially you're going to be in the event it's an FHA loan, right? Where again, ideally you'd want to refinance out of your FHA loan into a conventional loan once you have 20% equity to remove PMI. In just that one example, okay, when you do refinance, That $20,000 becomes immediately repaid. Okay. When the lender, the mortgage lender trying to do your mortgage refinance, orders something called a mortgage payoff, the lender that you did the down payment assistance, the Workers Advantage program with, will include that payoff amount for the amount of money that you were given assistance to. So let's say it's that $20,000 would be included, okay, as part of the amount needed to pay that loan off. So in the event that you didn't have enough equity of your own to pay it off and include it in that actual amount, you yourself would have to pay out of pocket dollars. Okay. So it's interesting. It's, it's a really, really cool opportunity for a lot of people that, again, don't have any other opportunities. They don't have any other, possibilities of their own, whether that be savings, like I said, 401k, give funds from family. But those opportunities, if present, will have huge advantages over not just this particular program, but any assistance or grant program, right? So there's that, especially the ones that you have to repay. Now, this particular program, again, it does allow for you don't have to be a first time home buyer, which is kind of cool. Um, can be used towards down payment, closing costs, whatever. That's pretty cool. It has to have some sort of a essential worker employment characteristic, which again they've kind of like labeled basically everything. So that's also pretty cool. And it's not specific to, or it's 150% of the area median income, which is also pretty cool. So there's some pretty loose guidelines for qualifying for this specific program, as long as you meet the essential worker guideline. But it's that one little itty bitty specific nuance, right? Where that $20,000 down payment assistance that they're giving you is non forgivable over the full 30-year term. I say this, guys, again, like I said, as the owner of a local mortgage brokerage, I'm the guy, okay? I'm the person that a lot of people here in town that purchase their home using down payment assistance or grant from whatever lender, bank, or whatever that they use to refinance to a much more affordable rate, a much more affordable payment. And time again, these clients of mine, they tell me, oh, they never told me about that. They never explained that it had to be paid back. I had no idea that I wasn't beat, whatever. Okay. So just make sure I'm encouraging all of you guys when you're working with your mortgage lender or partner, make sure that you're asking the hard hitting questions. You're drilling down into the details. Like I said, devil's in the details. So as long as you know and you're informed and educated, which is the one thing that we are always trying to do, not just with our first time home buyers, but all of our clients all the time. That's what we do. Okay. Transparency is incredibly important in the world of real estate and finance. Okay. But like I said, I'm just the guy that sees this all the time. And I'm the guy that goes in there to try to fix these things and refinance them and help them get out. And how do we do it? And right? But just wanted to, kind of make this quick. I don't want to say PSA, but it's nice to, get air this out a little bit, right? Because I continue seeing the Workers Advantage, the $20,000 down payment assistance, and the social media algorithms, and all the realtors. And trust me, it's fantastic. It's going to start a lot of conversations, and we always should be advocating and promoting for any avenue to become a homeowner. But just ask the questions, guys. You know what I mean? And work with the experts, people that really truly have your back. Okay, so lastly, let's talk a little bit about some market predictions for the end of the year. We have this is really the last full business week of the year. Next week we have Christmas. The following week we have New Year's, New Year's 2026. Hello, crazy! I don't even know where the time's gone, but I feel like we're ending this year on a very very solid note as a market in general. Mortgage interest rates continue to really kind of cool down a bit, which is nice. And we see, this is not huge moves, guys. I keep having to explain this to all of my, whether it's prospective home buyers or existing clients that are looking to refinance to these huge, insane discounts in rate and payment. Interest rates continue to improve, but it's happening over a slow period of time. Okay. And one of the reasons it's slower than we'd like is because they'll improve slowly for a period of time and then get drastically worse. Now they have to improve slowly again, then they'll get worse again. They'll slowly improve again. See where I'm going here? And that's not because of rates themselves or the bond market or whatever. That's because of the crazy volatility in the financial news in the world lately, right? The last year or two, whatever. So, right now, to give you an idea, we're fighting a horrendous job market right now. if you guys didn't already know, or you guys aren't following the economic landscape right now, the United States job market has been really, really rough lately. So there's some insane statistics on, how many jobs have been created over this last however many months, and how many unemployed workers are, having a hard time getting back to work. So the job market is really rough right now. Obviously, we have whatever's going on with tariffs. We do have tariffs. We don't have tariffs. They're getting sued to remove the tariffs, to give the money back. Like, that's not good. We have obviously ongoing inflation that they're trying to make sure stays and remains low. We have a new upcoming Fed chair that's going to be inaugurated here, I believe, early next year, which is very exciting, but it's an entirely new, brand new thing, right? Where we've had Fed Chair Jerome Powell here for so long, kind of running the ship, and now we have a new Fed chair coming. And what is that going to mean for the financial markets? So there's just things, okay? So mortgage interest rates continue to improve slowly. They can get significantly worse quickly. So you have to really stay on top of these things when it comes to the mortgage lender, broker, partner, loan officer side of things, right? To make sure that our timing is impeccable. Okay. So timing the market is not really a thing. Obviously, you really want to try to be time in the market, right? That's why you want to become a homeowner when you're ready, not trying to time the market for the best opportunity possible. Although there is some fantastic opportunities right now, but time in the market is so much more important than timing the market. But for me, if I can time, okay, specific rate opportunities for my clients, it allows them an even better financing opportunity and more affordability. So really important that the mortgage lender that you're partnering with, right, knows this stuff and really kind of invests some time into this stuff. Super important. But I do believe that the market is going to continue to improve. So that means the rate market, that means, hopefully the real estate landscape, right? We're still sitting on a decent increase in inventory, a little bit less demand than most people would like. Knock on wood, we've stayed very busy here through 2024 and the holiday season here. So that's fantastic. And I think that 2026 is just going to continue to get busier. But time will tell, guys. I think it's all heading in the right direction. I think we're going to see a whole lot more activity next year. There's going to be, as we see rates kind of creep even lower, there's going to be more new buyers in the market. But I want you to remember, okay, as that happens, as rates come down, as more buyers enter the market, less inventory is available, that means less like advantageous opportunities, right? Less seller credit, less negotiations, less repairs, less price negotiations, price adjustments, what have you, just less. So do yourself a favor. Make sure that you find yourself a local mortgage expert, someone that you trust, someone you know that's vetted, someone that comes recommended, someone that you can pull up their social media profiles, their Google My Business, their reviews, testimonials, and read about people just like you. What do they say about that mortgage lender? Always a pleasure, guys. It's 7, almost 30 p.m. Pacific now, and I want to go spend some time with my wife. So it's been a fantastic 30 minutes with you guys. As always, Mario Live on Wednesdays, broker owner here at Sienna Mortgage in Henderson, Nevada. Just remember, guys, who you partner with matters. Have a great night.